Good afternoon, everyone. It is a little bit afternoon here in Austin, Texas. And this is our 2023 housing update about real estate investing in Austin. My name is Matt with 1836 Property Management, as always, in beautiful Austin, Texas. Let's not forget that we do have a question button at the bottom of the screen for you. So if you have any questions, we'll do our best to get to them. But if not, we may have to refer to you afterwards, give you an email or something like that to connect if we can't answer it for you on the fly. Feel free to put anything we've got in there, though, and we'll do our best to take a peek from time to time. Today, I'm with Cristina Valdes. We've actually known each other in real estate, I'm going to guess 10 years in Austin. We don't work in the same office, obviously. We're different companies. She does sales, we do property management. But we have known each other, which is, I can't tell you how nice to have a decade of confidence in someone, to see what they do, how they behave, and to feel like when you see them, you can go, they're a good person. They do the right thing. It's just, with new people, it's, you hope, but you never know. And it feels so great to have partners that we know that are good people that are going to be here for the long term. It really matters to us and means something to us as humans. So want to welcome her on board. She is with Realty Austin and the Corazon team. And I will let her do a little brief intro and tell you about herself.
Oh, great. Hi, everyone. I'm, as Matt said, Cristina Valdes, Corazon team at Realty Austin. We are a small team of 3 agents and concentrate primarily in residential real estate and just helping people buy, sell, and invest around Austin and surrounding areas. And this is my 22nd year. Collectively, we have about 30 plus years of experience in real estate and investing. So yeah, it's been great.
So our topic today is buying real estate investments in Austin, Texas. Now, we could talk about different places in the nation and make our guesses, but the truth is you need someone with boots on the ground. If you get surveys and you get stats and all that, that's great to get started. But when you get time to invest, you need someone that has the experience, that knows the outs, that has the connections, and that is going to be in that marketplace. So Cristina is that. We are that on the property management side. And that's our topic today. So we're going to cover buyer competition and inventory, because last year that was a little nuts.
Totally different.
Cristina speaks to that side of things. Investment strategy and how to get started. She has some personal experience as well as professional experience, and she sees how these scenarios play out with investors over decades. So when you go to her, it's not just, well, did you read a book? It's, no, I've seen these things happen and I experienced them myself. That's a whole other level that other people won't bring to the table. Also, outside factors affecting the Austin housing market, like the economics, politics, war in Ukraine, a little bit of everything, including, I guess recently, the bank closures, and how that affects everybody.
Yeah.
And then everybody wants to know, well, where's the magic? Can you just tell me where to buy the magic? And I don't want to steal her thunder. I'll let her talk to that. But the magic is getting going. That's the magic.
Get started.
You are the hard part, not the market. But I'm sure she's got some tips and tricks for you on that. So Cristina, let's jump into the first one. Buyer competition and inventory. What are you seeing in Austin, Central Texas today versus last year, going forward? What are your thoughts on it?
Boy, okay, so last year, we were sitting on an average of about 1,500 listings, which is really low. So a month and a half of inventory. And it was like quick. And buyers didn't even have an opportunity to assess a property properly. So this year, what I'm seeing is buyers have time to make better decisions. And especially for investment purposes, you need time to run your numbers, crunch your numbers. It's super important to not get swept away in the emotions of a real estate purchase and really look at it critically. And thank goodness, like that is now happening. So we're in this window of time where buyers have the opportunity to assess, make this, look at different properties, compare them, and actually negotiate for some concessions, which is really great.
you're talking so much about the emotions of it all, and it's really interesting because I know you guys as agents work with people that want to be owner occupants as well as investors. And it's so interesting to see the emotion that goes into it as an owner occupant. And you move to investors and you think, well, this is going to be pure numbers. And most of them are. The seasoned ones really are because they've learned they can be hands off. But then you get the new ones and they're like, but I like it a different shade of brown. Uh, no. We don't discuss the brown. We go back to the numbers. So like, do the numbers work or not? That's all we're talking about. And so it's really a different mentality altogether. And you've had experience with all these guys.
You
So.
definitely, yeah, you definitely have to run those numbers and have your rules, for investment. And do you want it for cash flow or do you want it for appreciation? And do what's your tolerance
Yeah,
for all
absolutely.
of it?
So you've got more inventory this time. The prices have changed a little. What are your thoughts? Dig into the interest rate conversation for me. Tell me what your thoughts are on that. Where's it going? What do we need to worry about?
Wow, interest rates. So right now they're averaging about 6.5% for just, primary homeowner, the owner occupants. And so that it's always higher and more expensive for an investor to get financing. And that the whole interest rate situation is, I mean, the expectation is that we go into the fives at the second part of the year. And when that happens, things are going to change, I feel like, dramatically. Like a lot of buyers are going to get off the fence and take action. And they've been thinking about it and they've just been waiting because that interest rate impacts their buying power. And so they're waiting for that. Once that happens, we could just kind of go back into what was happening in 2021 and 22. We also prices have gone down a little bit, but they have not gone down a lot. So that you need to keep that in mind. It's the units sold, that has gone down, but the prices have, they've notched down a little bit. So it's not like, oh, I can buy a house that was, at the same price as 2018 or so. Like that just isn't
It's trying to happen. Yeah, I agree with you. I have a news feed for Google. I try not to watch too much catastrophic news that gets fed to you, but I always get these videos on things like the Austin, the real estate market. Go figure, right? I mean, that's the industry we're in. And I saw the first one pop up yesterday of somebody on YouTube that was, Austin is going to implode. It's all going to go away. And I thought, which way is the correct way to get rid of somebody? You swipe left or right? I don't know. But I swiped. I was like, I don't know what this guy is selling, but he is not living in reality. Every time we turn around here, there's another major corporation moving here. And I don't know if you saw the congressional hearings with TikTok, but Operation Texas was talking about the building down the street, Oracle, overseeing TikTok. Now, who knows if it'll ever happen, but it keeps coming back in Austin. And that Samsung plant is of strategic national importance. It's not just a chip manufacturing plant. I mean, they're not going to get a smarter phone. That thing is in lieu of some conflict in the Far East. And so it's really interesting to hear people kind of, well, Austin should speak, or I wanted to sell because it's never going to go. Guys, this isn't going away.
It's not going to get, it's just going to keep going. And the buyers, I just feel like right now for buyers, you're in this window of time and it's a window of opportunity that is slowly closing. So earlier in the year, it was a significant amount of contracts that were going under for less than 90% of the list price, so that was substantial. That is not the case at this point of the year. Part of it is that sellers are pricing their home, a little bit differently, but another part of it is that there is competition and there are still multiple offers. There's I would say about 30%, 30+% of the homes on the market are going for over list price. So that's still out there. The market's still moving, and the values are strong. So it's just when interest rates dimp a little bit, it's gonna be interesting. So take advantage of it now, really.
So you mentioned some concessions that you're finding every once in a while. Obviously, when you're in competition, there's not really much to concede because there's somebody else will just pay more than
Mhm.
you. But are you seeing anything on the new construction? And keep in mind that if you buy today, and let's say you're at 7, politics happen, and interest rates. Nothing is static, right? Life is about to change, and so you can't refi. You can't leave your spouse, but you can refi your house. And so you have to first get a house though to get
Uh-huh.
on the monopoly board. You can't just keep going around and collecting 200. You're never going to win the game. So have you had any interactions with the new home builders? Have you been any more successful there? Or is resale really the place for investors? What have you seen?
So new home builders right now is where it's at. I feel like they're offering some really amazing incentives. They have just situated themselves in different areas that are a little bit, maybe more affordable. Even the higher price new construction, they're still offering great incentives. They have deeper pockets. And so they're just, paying your closing costs, offering you money for, the deco center and, paying title and survey and just everything. It's a great deal. And so we have really, we started doing this several years back because Austin prices just got really high and the competition was getting fierce. We started really, you know, focusing on new construction for our clients. And it was good for investors as well as just an owner occupant. And I know, I mean, just like in Lockhart, there's a DR Horton community that had not allowed investors in the past, but then, kind of end of the year, all the builders sort of freaked out. They were like, okay, we'll let anybody buy here. So we were able to get one of our investor clients under contract there. I personally am under contract there for an investment property. I mean, there's just like the numbers worked. And when you see that, you're just, and, when you have like $10,000 in concession and $6,000 towards your, lender fees, that is significant. And I mean, even the builders are kind of closing down on that. Like that was earlier in the year. They're not really offering as much in the form of concession. But I was shocked when, we were just like, okay, we would like to buy the house, we pay this for the house. And it was a chunk less than what they were suggesting. And it was like a yes. So I mean, you don't hesitate to ask and negotiate with those builders because they're in the given mood right now.
You got to try. And then for our people that come over, you sell them the house, they need somebody to manage it. Just to at least state, yes, my homes that are out of state, I have friends that are property managers that manage those. They charge me for that job. And I would not ever consider doing it on my own if I was not in that city. Even in Houston, I would hire one of my friends. It's a bad idea. We can go into that another topic. But I agree with you. It's nice for these people, especially first-time investors, to come to the table with a new home because there is a little bit of a startup period in time and cost. And for them not to have to go in and make major changes, which require a lot of capital, and then to feel like the home is going to, okay, well, this is a 1 year, a 3 year, or 5, 10-year warranty on things. It helps. It really helps. So I'm getting told I need to stay on track on time too. But we are going to have to catch up and catch lunch one day. So we can chat. Did you buy real estate in 2022 or recently? Or are you planning on buying in 2023? And we'll kind of pop back to that in a minute as we look over this second topic and give people time to answer. So investment strategy and how to get started. Talk to me about how the market's changed. I think we covered a little bit of that, which is good, so we won't drag out the time today. What kind of buying strategy should investors implement that's unique to 2023? And then again, how do we get them on the board to get started? Because if you're not on the board, you're not playing the game.
That is so true. And I mean, I feel like number one, I feel like that if you're just trying to get started and you already own a home that you're living in and you think, I want to sell my house and buy another house. The easiest way to get started is to really crunch the numbers on your own home first and say, okay, does it make sense for me to keep this and then rent it out and maybe make a lower down payment on the next house, or just plan for a, a down payment in a different way on the next house.
Okay, can I pause you for 1 sec? It's kind of important. I want to point out that this is the reason that you are successful. I hesitate to say that to people because in front of agents, they go, "You're taking away my sale. You're telling my person not to sell." Christina, what you just did is said, look at what's best for you, your family, and your future. That's how you make decisions. And those are the agents you have to have on your team, is the ones that really care about everything and look at your best interest instead of, well, I can make another sale. Because if you're successful, if they're financially successful, they're going to buy 10 more houses to invest in.
All right.
But you give them the heart and the soul to do what's right. And that is, I just can't speak to that enough. That people need to recognize that. If somebody tells you to sell, maybe ask, if there's another option or why.
Yeah, definitely. Even if your lender tells you, you think about it, like your lender doesn't understand and probably doesn't own investment property and doesn't really, so depending on who you're working with, they might not really have the big picture. And so it's super important to have these conversations. I talk people out of selling their homes all the time. And so I have to talk to triple the amount of sellers because I talk them, a lot of them out, and we just go through that process, and it makes good sense for sure to, that would be my first way, is just consider the home that you're in. The second strategy, if you already own rental property, especially if you own it in central Austin, it's expensive, and the property taxes are really intense. And something that I did personally, I just thought there's no way. I have rental property in East Austin, and I was like, there is no way I'm going to buy another property in East Austin because the prices were so high. I added an accessory dwelling unit to the back of 2 of my properties, and it was such a game changer. It was an incredible decision. I was when you think about that, some of the smartest things you ever did. That was a really good decision. So, that is a really good option if you are in that kind of position to do it. And then I would also consider areas outside of Austin. Don't get so locked and loaded and needing to make it work in Austin. There's some really cool areas that are just 30 minutes out of Austin that would really cash flow and would do, where the numbers would work, and it wouldn't be just this situation where the property taxes are increasing at incredible amounts and stuff. So those would be my 3 that I would suggest to get started.
So, and this is another great example of why you have a team of people talking, because none of us know everything. And Cristina knows what she has to deal with to acquire the houses or how to maximize that. I know how to manage it and what happens when things go wrong and so forth with the lender. How do I build to rent, things like that. So the only caveat I'll say on the ADUs is that if you're going to STR them, which we do not do, we tried, we couldn't make work. If you're going to do those yourself, it's a lot of work, but you can do it successfully yourself. We started a separate entity and tried that, and we couldn't make the numbers work because of the licensure, the taxation. Airbnb, I can't tell you how difficult they are. That's the nicest way I can say it. I cannot tell you how difficult for both sides, but really for the owners. If you are going to put an ADU or a separate unit on a lot, on a house, it has to be physically separated. If you're going to ever think 2 residents are going to share yards and they don't know each other and not familiar, it's not going to happen. They have to have a separate entrance. They have to have a separate yard where it has to be fenced and subdivided somehow, because even the leases have to describe what they're leasing. And so you can't just pop it in the back and go, well, Susie's going to live there. Who's Susie?
Right.
So just short term, that kind of stuff works really well. But long term, nobody wants somebody in your backyard for a year, especially without a fence. So just keep that in mind on those. Next question, Gina, I'm going to do my best on this. Cristina is welcome to contradict me here, correct me. Taxes and rents are separated. They're part of the marketing mix, as far as what affects what, prices, interest rate. They go into the mix, but the free hand of the market is remarkably efficient because everyone wants to look through this queue. Well, if this, then this, and it's in, point two, well, it's point two here. And it's never correlated because there's so many variables. They do affect each other, but keep in mind on long term, short term is different. Those leases are in effect for a year. So if you change something here, it takes a full year for that to really even start affecting the majority of the market, because they're 12-month leases. It takes the majority. So anyway, I'll keep on time here as best I can. So it looks like we've got a few people planning to buy. Got only a few viewers today. However, this will go out to a number of people after it's completed. So just keep that in mind. And guys, if you have a great agent, rock on, knock it out, stay with them, and as long as you love them. Christina's here. If you need somebody, she'll be more than happy to give your contact information at the end of the segment. And I can vouch for her. She's a great person. So she does well. She does great at business. She's been around a long time. She's experienced. She's also an investor. But to me, she's a great person, which actually matters. So
thank you.
So let's keep on trucking before I get poked in the background again. And let's get to our third topic: outside factors. The world is a crazy place. I'm getting tired of watching the news at all. Just too much.
For sure.
How do these things affect the housing market? I mean, we could go down the whole list.
It's golly, and I after 22 years in real estate, I'm still fascinated by the way that things can be the same for a really long time, and then just it is like somebody flipped a switch, and it's like that instant where all of a sudden overnight you're going from 3.5% interest to close to 7%, but it's like, oh, again, Russia, Ukraine, or a massive shooting somewhere, or a terrorist attack. I mean, there's just so many things where buyers take a pause, and I think the whole, everybody takes a pause. And so you just have to be, I think that's really amazing. I mean, and just like who would have expected, the pandemic and then what the government did, and really it was like keeping the interest rates down, to the degree that they were. That was just to kind of help get us through all of that. Like nobody expected that, and nobody expected all the money that came through. So there are, I think, some fascinating things. My motto and my kind of the way my strategy is always like, when all the buyers are buying, like I don't want to be a buyer. When and when there is fear in the market, that's when I want to be a buyer. And so, because that's my I'm an investor at heart, so that's kind of the way I think. And that's why when everybody was buying and it was kind of madness, I just said, hey, I'm going to build some accessory dwelling units on my property, and and actually I long-term leased those, and they rent out for more than I would have ever expected, so it worked out nicely, because it gets too complicated when there's two properties. And I agree with you, when there's one short-term and one's long-term, it's madness. But there's just, who knows what's going to happen next week, so we just really have to kind of maintain your investor rules, and just be patient and watch. And when buyers do take that pause, that's the time to come in and actually maybe find a really great deal that would be a perfect investment property.
I couldn't agree more. So I want to pop up another poll for us. If you could buy an investment property in the greater Austin area, where would it be? Funny part of this is those that are of us that live here, we're like, I'm a Southie. I live up north. And I don't know why the river is such a dividing line, because it doesn't really matter. But it's funny. It's like no one wants to go across the bridge or anything to the other side of the city. I will say traffic is a factor. So definitely take that into consideration as you're looking for places around here. So another topic for you, and hopefully we're getting toward the end so we can stay close to time here, is areas worth consideration. And so this fits right into our poll. And you mentioned Lockhart. You service the entire area. What are your thoughts? What are you seeing?
So we're fortunate in that we work by referral, and we get to work all over town. That just takes us kind of all over Austin and surrounding areas. the places I'm liking right now, it's funny because they're all kind of south. It's like New York. But and the places that I'm really liking now and seeing good opportunity are, still like Buda and Kyle. They are rocking it over there. And I think that there's just so much growth that is still yet to come over there that it's a great opportunity if you can make the numbers work. I really like Lockhart, and I really I'm strongly considering the Bastrop area just because. So what happened is Austin just became so expensive. Everybody had to seek other alternatives, and so they're coming out to these communities. And then the toll roads came and changed everything. It's like making it so easy to get to these places. Like people think Lockhart's 2 hours away. It's only 35 minutes away. And there are these cool little places where now there's some new development coming up, and there's new construction going on, and they're offering an incredible deals where you can get really nice houses for low 300s, and the numbers make sense. They rent for $2,200-$2,300 dollars per month, and that's the price point. So I had an old property manager in El Paso because I used to have some property out there, and he said anything can cash flow. It just depends on how much money you want to put down.
Not wrong.
So you factor that in. But if you're just going to consider like the at 20% down, these places cash flow, and so I think that's exciting.
It is. And I think, your return on equity, how far do you want to use that leverage out? If you're closer to retirement, we need to be talking about what your retirement looks like. If you're 30 years old and you're coming to us and you're like, I think I want to rent this as we upgrade, man, you have a beautiful road ahead of you if you can keep that ideology, because don't sell, just rent. We've got some clients that are third generation, actually, that come in and their grandmother told them, don't ever sell. And it's just interesting to see how that's gone for the family. So, go ahead.
I have a hard time selling anything. So I think I think I've maybe sold like 3 properties, out of 10 or 11. So and it was painful. It still hurts me that I sold.
I've got one I don't even like, and I won't sell it.
Yeah.
I really dislike this house. It just, I don't know, somehow every time we get bad tenants or bills or I don't know what's going on, I'm not selling it because the numbers work. So, I mean, yeah, I feel the way I feel, but I make a decision on the numbers and go from there. So it looks like, let's see what our poll says. We've got most folks looking in the south. I will say, speaking of the toll road in Houston, they built that Beltway 80. In Houston, they've got probably 4 beltways at this point. But when they built Sam Houston Tollway, 8, there was nothing on it. I dare you to go down. You can't even drive the speed limit. And those are all homes around it and jobs and businesses. So there's always it's just going to fill in. That's what happens. Infrastructure comes, businesses go, jobs go. And it's also closer to the Samsung side and everything else. And so easier access to San Antonio with the tollway. It's going to fill in. Opportunity is out there for you. Cristina, do we have your information in here? And then I want to touch base on some of these questions just to make sure that we address anything. Do you mind typing your information in here?
Oh, yeah. We're at,
I don't want to miss it. And if somebody's getting close to time, I want to make sure they get that. We'll just go down a couple of these questions, and I'll see if I can pick these out so we can address them, and then kind of head out so you guys can get back to your lunch. And then I may even ask you to answer some of these when you're done with that.
CorazonTeamAustin.com. We're also Google my name. I've got a YouTube channel, not as vast as yours, but I've been working on it for the past couple of years. So there's a lot of information. I do have a video out that's like, don't sell your house, keep it, make it your investment property. So that it's really, it's just so important, because I know I did that for myself and how that really changed the trajectory of my future, just doing that kind of stuff. And so I think it's important for everybody else.
It's massive when you look at your net worth, what that does over time. So I'm going to hit a couple of these. We'll try to stay just within 1 or 2 minutes. If we go down these questions, I want to get your thought on this. Does the ADU mean you can charge more rent? Did we answer that sufficiently, Christina? Do you have anything else to add?
Well, an ADU is, and so it's an accessory dwelling unit, and it's usually, kind of off the alley, or if you're on a corner lot, it's, off the corner. Um, they get, for some reason, they you can get more rent just because it's new construction and it's going to be a nicer, finish out than probably what's in the neighborhood. It's, mine rents for a consistent price. It's 1,100 square feet, and it rents for the same as the 1,500 square foot house in front of it. So yeah, I mean, but it's just the fact that it's bright and shiny and new, and usually in Central Austin, so you can charge more.
And then back on the topic of rent growth or change over time in property taxes, do you, Christina, feel like there's a correlation between property tax increases and rent growth, or what do you think that mix looks like?
I definitely, I do think so. Like when the property taxes increase, I try to be real mindful of having my leases, and after I find out what the proposed value is going to be, like I don't want to get caught with agreeing to something and then all of a sudden I get a big hefty increase, and I just want to know the information before. So I try to be mindful about these end dates. But it definitely does. I mean, everybody's looking at their bottom line, and they at the end of the day, you're running a business, right? So you want it to at least break even or cash flow, but an increase of the property taxes, because like I have had some of my properties increase over $100,000 in a year, because we don't have any cap on how much they can increase. And last year was insane.
Right.
How much that increase, and all of a sudden you're thinking like, oh, and now I'm not cash flowing anymore, and so something has to change. So yeah, I see eventually the rent is going to be bumped up, and then it just is hard for tenants. I think we're going to see maybe a little relief on the property taxes this year. That's my hunch, but what do you think about that?
I think the state legislature and the city council and everybody need to actually speak to each other. And I think the legislature is going to have to take a role. But I've seen the council do politically charged things because they know the legislature only meets every couple of years, and then they have to go back and spend our tax money to correct it. But that's the way it goes. I don't see any of them doing anything that's not politically charged. So we're past our time. We've got 4 questions that I was pointed to by my wonderful marketing person that we can touch as well. And I'll see if we can get these in. Obviously, you've got Christina's information. If you need to bug out for a couple minutes, I respect that completely. We did run over just a few, and we thank her for being here. But let's see if we can hit these. If you can stay with me just 4 more minutes, Christina. Are prices declining in 2023? How can we tell if they've bottomed out?
I mean, that is such a matter of opinion, but prices have declined. I mean, we're looking at maybe. It depends on the area even, but 2 to 3% in some areas and 10 to 12% in other areas. I follow Chris Jacobs on the housing report, and he mentioned that actually new construction, their pricing is their under contract pricing is trending at 2022 values, and resale is trending at 2021 values. So it's interesting. So, that means there hasn't been we're not down to, 2019 or 2018. So I think that's really interesting, but we're seeing less units selling. We're not seeing drastically lower prices because sellers, they're sitting on 2-3% interest rates. Like they don't have to sell, so they're not going to sell unless the numbers work for them. Right. So they have a lot of equity, and they are sitting on a very low interest rate. So there's very little motivation there. So it's not like what happened, in 2008-9, where people just were so highly leveraged and they just, that they just had to get out.
Agreed. All right, next one. I'm not sure I'm going to phrase this correctly, or maybe I'm just reading it on the fly incorrectly. Is it still possible to buy off a plan before construction? Does that ring a bell, Christina?
I think, well, I think it's, yes. I mean, a lot of the builders are just trying to do inventory because there was such a shortage of materials and they were trying to really streamline and control that process. They were not allowing the buyers to just say, like, I want this plan and I want this tile and I want this flooring. They were trying to really minimize that. Some builders are coming back to that where you can go, you can pick your lot, you can pick your your floor plan that goes with it, and you can even go to the deco center and choose your stuff. But what your choices are limited because they're still trying to control the whether just that they are trying to get you to choose the things that they know that they will have in stock.
I'm going to take the next one for you, and it's about I don't know why politics is just so fun to make fun of, but when's Abbott going to fix property taxes? It has, my understanding from my friends who are in politics down the road this year, it has been a sue because we have a surplus of money. And when there's money, people are going nuts trying to get their hands on it. Obviously, also the officials want to do some property tax relief. And so they're working on that. I don't think anybody foresaw. Texas has been so steady, the steady, slow burn for so many years. I don't think anybody saw the kind of jump that we expected. And I don't know what they're going to do at the end of the session or what the relief is going to look like, but I do think something has to come out politically because people, even people that are capable, are hurting. The values just went up so quick, so fast. It wasn't normal for us around here. So I do expect something to come out of there. And then as far as exploding costs, Texas now slowed the migration, reducing now. There's too many jobs here. It's just the environment's too good, and I'm not red or blue. I think both have valid points, and both have points that don't make sense. Regardless, when I travel or I talk to the people, the economy in this area and the state it really is just that good. And
we're fortunate.
I'm not trying to say it's one group or another. Maybe we're lucky. Maybe it's an ideology. If you're not from here. We locals actually have a strange ideology that you're supposed to do what you say and say what you do. And if not, we're happy to let you know where the exit is to get out of town. And I don't know that it's that way everywhere, but we were brought up that way. Maybe that contributes. I wish everybody just handled things that way, but we do the best we can. Is the city of Austin ever going to vote on allowing ADU on SF2 and 3 zones? To be honest with you, I can't keep up with the city council because they meet until 2 a.m. just to argue with each other. And so I kind of wait until things are signed and then deal with them afterwards. It's just a political circus down the street. Christina, do you feel differently about that? You've got those meetings.
Oh gosh, the city. Well, one thing I wanted to mention about the property taxes, the stuff that I kind of followed, it does it sets up for relief for owner occupants and those people who have homestead exemptions, but for investors, I don't see, unless the rate decreases, that's going to be the biggest one. But as far as like exemptions or just or cap or anything like that, it's still going to be a free for all, with the county, and they just want they'll increase as much as they can. But then, what was the second question? What were you? Let me see.
The next one was about ADUs and if the city's going to permit them on SF2 and SF3 zones.
Oh yeah, that's gonna be really interesting. Well, they are allowed on SF3, so that's for starters. That's where the ADUs are allowed. But I mean, the city changing its zoning is going to be it's a long process, and it's going to be very involved and with a lot of rules. So I wouldn't hold your breath.
I get it. Christina, I can't tell you how great it is to have you as a friend and a colleague.
Thank you.
I agree and believe in you, and I know that these people would be well served if they gave you a call. And I've just got nothing but positive pats on the back for you for all the great work you do. And I love that you invest as well. It makes it real. There's no choice. You're the one paying the bills too.
Yeah, no, it is. It's a great experience, and it brings a whole different level of conversation that we can have, and just like the background with building an ADU, like that taught me tremendous things. The nice thing about our team is that all three of us have investment property, we're, well versed in long-term and short-term rental and can, talk to both of them. And I agree, like short-term rental is, not always everything it's cracked up. There's like the hotel tax, between the hotel taxes and the management fees and, the utilities and all, and the headaches. Sometimes the numbers don't work and it's, a bigger headache than it's worth. So.
Yeah. Thank you again for your time. We'll let folks go now that we kind of ran over a little bit. We'll see you on the next round. Feel free to subscribe to our YouTube channel, to our Crowdcast channel. Feel free to get on Instagram for the Corazon team and reach out to Cristina if you have any questions. And we're here for you guys. We're here to help you. We're here to help you and your family be successful, reach your investing goals. And we just can't say thank you enough for all the time you spent with us and referrals and everything else. It's been a long road. We've been doing this for a very long time. There's a cell phone for you.
And that's my personal cell phone. so call me if you have questions and want to chat out an investment option.
Thanks, Cristina. We'll see you again soon.
Thank
Guys,
you.
we'll catch you on the next Crowdcast. Have a great rest of the week.
Bye-bye.
Bye-bye.